So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to go through the 11 different stock sectors and basically how you can use these to help diversify some of the trading that you do. So as many people know, there's a lot of different sectors and industries that you can generally invest in. We know the big broad ones like energy and healthcare and technology, but there's actually just 11 that are the Global Industry Classification Standard, or GICS. And so this is what most brokerage platforms, most institutions, mutual funds, hedge funds, ETFs use as kind of the main classifications of different industries or stock sectors. Now, when you're trading options, it's my opinion that you should absolutely be invested across a broad variety of different sectors and industries. I think it helps reduce not only the asymmetric risk from one or two sectors kind of blowing up or making these big moves, but also helps smooth out returns. And we've seen in backtesting helps enhance portfolio performance. So again, not to say that you have to be invested in all of these at the same time, but I think generally having an awareness of these different stock sectors can definitely help. So the 11 different stock sectors are energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, telecommunication services, utilities, and real estate. And so again, in my opinion, I think you should broadly be invested in these across on an ongoing basis. That means that every single month you don't have to have all 11, but maybe one month you trade 8 out of 11, the next month you're 7 out of 11, the next month you're 9 out of 11, and these can rotate and change and kind of, shift and ebb and flow. I think what this industry sector classification is missing, though, is exposure to things that would not be traditional stock sectors, but that you can gain exposure to through the use of ETFs and options trading. Things like emerging markets and currency, I think, are some of the big ones. Also, bonds could be thrown in here as well, and broad-based US indexes. So I don't think that you necessarily have to do just these and stick to this list. I think you should throw some of these other ones in here. Like I said, currency, emerging market, bonds can definitely be added to this list. And I know that we trade that on our end here at Option Alpha. So hopefully this helps out. As always, if you have any questions, let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.